crude oil had been positively crushed over the last few weeks, but it looks like we're seeing a big bullish turnaround today with a hammer candle and a bear trap and a bullish reversal forming in the oil markets. When we look at crude oil trading, we've seen that through the winter it was kind of hanging around for WTI between about 47 and 55. This was despite huge inventory builds in the United States, and what we've seen was that the positive impact of the OPEC production cuts announced in late 2016 was offset by a ramp up in U.S. production, where market share was shifting back from OPEC to the United States. It looks as though traders have figured this out heading into the OPEC decision on whether or not to extend these production cuts later this month. And in recent weeks, oil had been tumbling in a big way. If we look here at the chart for WTI, what we can see is that we had it had reached $54, $55 up in late March, and even here 53 and a half in mid-April. But then look at this, steady declines. One round down, a pause at the lower level, a second round down. And look at this, after we broke this 48 here, momentum really accelerated to the downside. 2 huge candles. But it looks as though this selling pressure might be getting washed out, and here's why. We saw the oil break, WTI break 45, dive down to 43.50, test this Fibonacci level here and rebound upward. This is a bullish key reversal. This is a bear trap dipping under 45 and back up. This is a hammer candle hanging around up near the high end, and if anything, a nice bullish turnaround. And on top of all of this, we have an oversold RSI here. So this rally has gone from being momentum has gone from being overbought to oversold. We had the trigger back here breaking under 50. That came in right around here when momentum started to really turn downward. Now we're seeing that it looks like the sell-off's gotten overdone, and we're getting into a potential trading bounce here. First resistance emerging around 46, next around 47, and then up around 47.70. Emerging as potential support 45.35, and then the $45 even level. We're also seeing this getting confirmation in other oil markets. For example, when we look here at Brent, we had an overnight dip from 47.80 down to about 46.40 and has bounced back up positive on the day. Similarly, Brent crude also oversold. Looking at gasoline, gasoline's oversold. Gasoline had been driven relentlessly downward from early April, so the better part of a month in which we only see 1-2 up days. Every other day was down, so really getting overextended to the downside here on gasoline. It's done a full round trip from 144 all the way up to about 190 and all the way back down. So it's completely given all these late March, early April gains back. It's getting oversold, probably at a point where it could be starting to stabilize here between about 144 and about 154, with the 150 round number sitting in the middle. Natural gas, meanwhile, has been holding steady. It didn't participate in the sell-off. It hasn't participated in any kind of an emerging rebound. But what it does show is that as we move through May and we head towards this OPEC meeting, we could see a lot of sensitivity in oil markets. The other thing to watch for is how our commodity prices acting in general. Next week we get more data from China. People have been really concerned about China slowing. We've seen that show up in base metal trading with copper, nickel, lead, zinc all selling off this week. That has impacted crude oil as well. Have we reached a point where this is all getting washed out, or are we just getting a reprieve before further declines? Remains to be seen. But the one thing that is clear is that it looks as though energy and commodity trading could be active right through the month of May.